you have that mission behind it. I believe Oscar Health, really backed by the CEO, Mark Bertolini, they have that mission behind it too that really draws me to it. It really just like, some health insurance companies are all about greed and, just penny pinching everybody and just collecting that premium and then not paying out claims and not getting people the healthcare that they need.
Welcome everyone. This is Mariusz Konieczny. I have a special guest. I'm interviewing Ronnie V. Ronnie, thank you very much for joining me.
Yes, of course. I appreciate you reaching out, having me on.
Okay, so you talk your show, Ronnie V show, where trading and investing meets. Very interesting. So talk to me about what do you mean by this? You look at fundamentals, you look at technicals. How do they meet?
Yeah, so I believe that with fundamentals, that's one part of it. And I believe the hardest thing about investing is not learning PEs and fundamentals and learning how to read a financial statement. I believe the hardest thing about it is having the abundance that we have of stocks that we have on a consistent basis, and we 10,000 plus stocks to look at. How do you figure out what you're going to invest in? How do you narrow down to 5 to 10 to 15 to 20, right? How do you narrow down to 20 individual stocks? Because 20 is kind of the cap. If you're doing more than 20 stocks in an individual portfolio, the studies have shown that you're better off just investing in the ETF that mirrors the S&P 500, like VOO or something. So, how I really see it is I need some way to get down the fundamentals, what I believe is undervalued, and get it down to sub 20 stocks. How do you do that? Because sometimes you'll have even 100 stocks that are like, wow, these are all undervalued. I really like them. And yeah, you got to narrow down that conviction in them. But at the same time, I bring in my fundamental analysis with my technical analysis, and that's my whole thing, right? Where trading and fundamentals meet. It's my whole thing, bringing those together so I can find the undervalued companies, have conviction in them, but then also put that together with the technical analysis side of things on a larger time frame, like a monthly time frame. That's how I really look at it, and that's how I really define and pick out the best investments that are A+ setups on both sides. I think it's a very underappreciated thing that not too many people do. So
okay, now what's your history? How did you get into investing? How did you get into content creation?
Yeah, so I kind of have a weird history, I guess. At 19 years old, I went ahead and I joined the Air Force, and really didn't have much going for me as a young person. Didn't really have good structured home, I would say, and just kind of didn't really know where I fit in or know where I was going. But I basically joined the Air Force, got a little bit of structure, did that for some time, and then on one of my deployments over to the Middle East, I heard somebody talking about investing, or actually they were talking about trading, day trading. And so I started, I went on the YouTubes and started looking at that, and just kind of tried figuring out what this was and how this guy was saying that he's making all this money from it. And it's funny because that kind of drove me into understanding and learning about investing, and that's where it all started. And then from there, just kept on reading books, watching YouTube videos, just kind of trying to self-teach myself how to do this and how to provide for my family and make generational wealth off of it. So
now, do you do this full time, or do you have a job?
Yeah. Yep. I do it full time as of right now. And then we have the community as well that I run to try to help people, to try to bridge that gap so they don't have to self-learn everything, obviously.
In terms of learning about fundamental analysis, what kind of books did you read, and who influenced your your learning on that particular side?
Yeah, so there's actually one actual key YouTuber, Financial Education. I don't know if you ever heard of him. pretty big YouTuber. I watched a lot of his videos from the very beginning, and in his very beginning, he did a lot of like tutorial, educational videos, just kind of teaching you the very basics of it all. So, you know, he really helped me. Um, Obviously, just I mean, everybody's gonna say this, but like just Warren Buffett and Charlie Munger, just consuming everything, like all the interviews that they've ever done, and just trying to learn as much as you can from them. So, yeah.
And then, so when you select individual companies, on the fundamental basis, what do you look for? Do you look for cash flow, revenues, growth, low PEs? Where do you stand on that spectrum?
So I'm a strong believer in the discounted cash flow model. It's my favorite model out there for really narrowing down and finding the best investments. It would have led you to stocks like Palantir and Robinhood in like their early days, because those stocks in their early days, they weren't really a PE story, they weren't really an EPS story, they were more so like a free cash flow story. And so I just really love understanding the cash flows of a company, understanding where that's going to go if you extrapolate that out by 5 or 10 years, and really trying to narrow down, being conservative. I'm very conservative when I run my DCF model. I base it off, with Charlie Munger, his model, and doing like a 10% standard, usually terminal fair value or terminal value. So yeah, I would say that's my favorite tool, this kind of cash flow model. And then I obviously look at PEG ratios and PEs and EPS growth rates and all that stuff. But number one that I've built like my Excel spreadsheet, my high five snapshot Excel spreadsheet out of, it's discounted cash flow, and just extrapolating that out on conservative assumptions.
Now, I first discovered you on social media because you tweeted about Aduro Clean Technologies. Do you remember that?
Mm-hmm.
What sparked you, if you still remember, what sparked you to talk about this company? Because I don't know if you know, but I own 1% of all the shares of Aduro Clean Technologies.
Oh,
And,
wow.
that's how I discovered you, because you talked about it. So tell me more.
That's awesome. Yeah. So I'll be totally honest. I haven't looked at it too much as an investment. I clearly need to, after this interview, definitely. It was more so a trade setup on my side of things. Sometimes. So with I have like this whole thing. I say like left brain, right brain. Left brain is going to be investing, and I keep that all separate. My portfolio separate, and then right brain is trading. Right. Now, not to get it confused, because I know I say we're trading and investing meat, and I think that's very important for investing. But I still believe that, like, with investing, it's long term, and I simply am just using technicals to try to find the best time to be buying without like catching a falling knife. On the trading side of things, I'm simply dating the stocks. I'm simply in, I'm simply out. I'm just looking for some profits. That was probably my tweet on Aduro. Was as a trade, but I mean, I would like to hear more about it. Of course, I haven't looked too much into it on the fundamental side.
Well, I suspect, and correct me if I'm wrong, probably a lot of people tweeted you about this name for you
Hmm.
to, right? I find it interesting because Aduro Clean Technologies has big cult around it now. There's so
Yeah.
many people that are talking about it, and it's a very unique company because so they have a technology that can recycle plastic. But what's unique about it, that we're even talking about it, because there's like two camps of people. Some
Hmm.
people will not look at it. I mean, will not look at it because it's considered a pre-revenue company. They have some
Hmm.
revenues, but it's mostly about the technology and commercializing the technology, because the world right now, less than 10% of plastic is being recycled.
Yes.
And if they have a technology that can be commercialized to recycle plastic profitably, I mean, that's a solution to $1 trillion problem. And
Yeah.
a company like this then cannot sit at 500, $400 million valuation. So everything is about figuring out if the technology works and what it can do for the world. And I say that it's these two camps because sometimes I'll tell people about it, and literally, if you gave them two choices, would you look at Aduro or do you want me to take one of your eyes? And then they'll say,
Hmm.
take my left one because I'll still gonna have my right one.
Hmm.
That's how like people are so uh, boxed into this. If it doesn't have revenues today, right now, I'm not gonna look at it. So I just found it interesting that you tweeted about it because maybe you don't suffer from the what I call RMP syndrome, revenue
Hmm.
profitability syndrome, and maybe you're an open-minded. So I suggest if you want to look at it, look at it, but it is about the technology. It's about
Yeah.
if the technology works and it scales, the game over. This is going to be a multi-billion-dollar company.
Yeah. I was looking at the chart here while you were talking on the monthly chart, and yeah, it's had a massive run up from 2022 into 2023, and then it really exploded over the last 2 years. The last 2 years, it's 346 up to 1471. So yeah, massive move. I see that yeah, no revenue yet, or very very small revenue, lots of losses, but yeah, we understand that that's going to happen whenever you're beginning stages and something like that. You have to obviously find your it recycling's that thing that's been a problem forever, obviously. So if they have the solution to it, I definitely see where that could be like you say, like a multi-billion, multi-trillion dollar opportunity for this company. It's just I don't know the leadership and stuff like that. Definitely going to be looking into it now more, just to see. But I would assume that if you have a 1% position, then you're obviously very, very knowledgeable on it. I have people on my live stream right now talking about you and saying how knowledgeable you are on it and how you've been calling it out for a while. So kudos to you. People that are following
Well,
me have been following you, which is
I
awesome.
made over 140 videos on the company.
That's awesome. That is conviction, man. I'm very convicted in like Oscar Health, and I haven't
Well,
made that many
let's talk
videos.
about Oscar because I made a video about Oscar on my channel, but let's talk about it
Yeah.
because health insurance, health industry is a big problem in the U.S. and they're
Yes.
solving a major problem. But I'd like you to share your research with my audience.
Yeah. So, um, yeah, it's a very big problem, like you said, but the biggest problem is greed. You know, so for me, and probably for you too, right? Like Adore is an investment for you, but it's probably drawn to the mission too, right? I would assume you're drawn to that mission that we do have. I mean, I haven't looked at any of the studies or anything like that, but I'm sure it's like how much trash are we going to have? How much trash can we bury or burn before it starts to just pile up in the streets, right? And so you have that mission behind it. I believe Oscar Health, really backed by the CEO Mark Bertolini, they have that mission behind it too that really draws me to it. It really just like some health insurance companies are all about greed and just penny pinching everybody and just collecting that premium and then not paying out claims and not getting people the healthcare that they need. And I don't get that vibe at all from Oscar Health and Mark Bertolini. I think him being a previous CEO of Aetna before they were acquired by CVS, and taking that company from you know 10xing it essentially, and then his time at Bridgewater, right? He was a co-CEO and about to be CEO of Bridgewater, right next to Ray Dalio. So his pedigree is very high, and just his story. I don't know if you watched his interviews about his story about his son fighting through cancer and beating it, through just what was it? Basically like a trial medicine where he was able to beat like a terminal cancer, and then his story of basically how he came to God during that time with his son and cancer and saying, take me instead. Like, don't take my son, take me instead. And his son was cured, but then literally a year later, he was almost, taken out from a skiing accident. And yeah, he basically severed his spine, which he should have been dead, but he slid into, basically a ice pool, and it was able to stay fused long enough for medical attention and everything. And then he was going to be a paraplegic, and then he fought through all of that, and then he was able to overcome that. And then he was able to not just overcome that, but then he was still working at Aetna at the time. And then he was able to 10x the company from there, which is absolutely astounding. And he even said it, like he was like, I wasn't the nicest person to be around. And he basically was like, I got crap done. And I wasn't the nice person to be around because he was sleeping like he wasn't getting like any sleep because of the chronic pain from everything that happened. And then he since has started taking medication and done some things, medically wise. I don't know the full story, but yeah, he's been able to do things to alleviate that now, and he's in a whole lot better position. So what does that have to do with the company? I just think someone like that with that kind of story is just, I don't know where else I would want to put my money.
Driven, right?
Yeah, he's mission driven. He's literally saying, and like with that kind of story, and listening to him talk in interviews and understanding him as a man, you have to like just sit there and be like, am I going to take this man at his word or am I not? And he is somebody who's also said in multiple interviews, and if you talk to anybody that's known him, he is a man of his word. And when he says something, he means it. And it's not just like, he doesn't just say things for thrill or frill or anything like that. So him being so mission driven with that and him leading this company, I feel very, very safe with my investment. It's one of my largest investments in my portfolios across the board. I don't own 1% of it. I wish I did.
Well, I mean, we're talking about a different level.
Yeah. It's almost
when I got involved with Aduro, the market cap was $50 million, right? 10x ago. So it's a lot easier to build 1% position on a position like this than it is on a multi-billion-dollar companies. But but when you get early in those opportunities, I mean, you can make a buck.
Yeah. So yeah, the company, I mean, they're pretty reliant on ACA subsidies right now, which is a very hot topic. Obviously, with ACA subsidies, you have the government. Basically, some would argue that it's shut down because of the ACA subsidies not getting extended, and that's kind of like the encampment on the left is, hey, we want ACA subsidies to get extended, Obamacare. If we're going to open up back the government, they're kind of holding that hostage. And then the right's kind of like, no. But it's funny because on the Republican side, 60% of people that are using ACA subsidies are actually Republicans. And this all rolls right into midterm elections, obviously. So, do I believe ACA subsidies get extended? I do, before the end of the year. But even if it doesn't, they have guided for next year completely without ACA subsidies in mind. And they plan to go after ICHRA markets and, basically after self-employees, you'd call them, essentially, like Uber drivers and, people that work for DoorDash and all that kind of stuff. So, yeah, I mean, as a trader, it's kind of hard because I talk about trading and investing on my platform. And with that, you get a lot of, people being like, yeah, Oscar. But then, once the stock starts dropping from 20s, even though we were buying, sub 15, people start to be like, hey, what's going on, man? Like, and it's like, hey, I'm in this for the long term. I'm in this for like years. And as long as Mark Bertolini's at the helm, like I'm on board with this company. Just not because I see them as a 10x potential. That's definitely a big part of it. But I just see the mission behind it as well. I see the mission of them and what Mark Bertolini is trying to do, and just him being like, if someone asked him like, hey, if somebody came to you and wanted to buy you out today, he's like, no, that's not the point here. Because he was retired, fully retired. He was done, and he came back and he was like, okay, I'll do this, but I'm not settling, I'm not selling out. Like we're gonna do this, and we're gonna change the system, and that's the mission behind it. So that's what really draws me to it. I could talk about the numbers, the fundamentals. I could talk about how undervalued it is. Especially the discounted cash flow model. This year was a bump in the road because medical loss ratios kind of skyrocketed out of nowhere this year. But the thing people fail to understand is the medical loss ratios isn't an Oscar issue. They continue to drive down SG&A cost, right? They continue to drive down expenses while they continue to increase margins, right? It's just the fact that medical loss ratios across the board came in and kind of shellacked everybody. So that was a big issue for this year. But again, I think it's funny because it's a one-off year, because typically that's like down to like 70, between 70 and 80% historically. But yeah.
Okay, so my final question is with a company like Oscar, your goal is to hold it long term.
Mm-hmm.
But then on the trading side, you constantly get signals to do something, right?
Yes.
Buy, sell, hold, cut losses, and this. So, like, how do you control yourself to, as you said, you read Charlie Munger, how do you sit on your butt and do nothing when you have these signals constantly whispering to your ear, do something every day or every week or whatever?
It just goes back to having two separate portfolios, really, or multiple portfolios, and really a trading portfolio and then multiple investment portfolios. But left brain investing, that's long term, and that's kind of like you don't touch it. You're only adding money in there, you're only buying in there, and the only time you're selling is if valuations just get really, really crazy, right? So like Palantir, for instance, nobody's gonna like sit there and say, wow, you really took some gains, you really trimmed a little bit of your Palantir position. Well, yeah, no one's gonna get on you for that because everybody knows that, hey, they're really overvalued. Does it in the long in the long end of things, right? I believe Palantir will probably be $1 trillion market cap. I mean, they're kind of heading that way, right? But valuations do matter. So I believe, for me in those portfolios, it really comes down to if it's ran a lot and ran way past its, there's no more margin of safety, even when you're running like crazy projections. And now you're getting like what I call margin of risk, right? You have your margin of safety, which is undervalued. You have your margin of risk, which is overvalued, which means if I'm really running projections and it's saying, hey, we got like 30, 40, 50% over the margin of, the fair value, margin of risk based on simply really, really crazy projections, like me sitting here saying like, yeah, Oscar's going to grow 50% for the next 10 years. And then if it's still overvalued, then yeah, I should probably be trimming some instead of just holding on to all of it. But I have a rule that I'm not going to trim more than 50% of any of my positions on the investing side. And the only way I sell it completely is if my investment thesis changes, right? So I do combine the two, but it's not about like technicals is kind of like a second fiddle to fundamentals. Fundamentals always come first, and then the technicals are used to help me find entries into my investments. The way to answer your question, really to help with all that, is I still will trade Oscar because actually it's a really great stock to trade because it is crazy volatile, kind of like hims and hers. Crazy ups, crazy downs. I mean, we went from a low of 11 all the way up to 24, and then we went back down to like 14 just a couple months ago, and then we went all the way back up to 25. So crazy swings. So I'll still trade it, but again, left brain investing, that's going to stay over there. Right brain is trading, and I'll be in and out, and I'll date Oscar over here. So I think that helps with like my itchy fingers to try to like, want to do something with the moves that's happening, but not fully be in and out of my investments, right? Because we all know that getting in and out of your investments. I mean, I'm looking at the Aduro, right? Aduro stock chart on the monthly. Yeah, if you would have bought in, let's say you bought in at the low of May 2022, and you bought in at, let's see, the close was $1.40. If you bought in there and then it ran all the way up to 2024 in November, right? It ran to, let's say, $7 high. and then you had that giant tariff getting pullback in April, and it ran all the way back down to, let's say, a low of $3.49. If you would have sold at any point, you never would have got back your $1.40 cost basis. You could have perfectly timed it and got back in at $3.49, but you're still never getting that cost basis back, and that's huge. You know what I mean? Because then you got to pay taxes on that, and then you got to subtract that from what your gains were, and yeah, that whole thing. So yeah, I believe with investments, like, find them and hold on to them, and that's really it.
All right. Well, that was fun. Thank you for doing this.
Yeah.
I'll be looking forward to your thoughts on what you've when you study Aduro, what your thoughts
Yeah.
are about it. Because now you just looked at it from the point of view of a trade, and now let's see what you can come up with from the point of view of investing.
Yeah, I'd definitely be looking into it. Obviously, it doesn't have free cash flow, or it doesn't, have net income positive or anything like that. I have looked at companies like this in the past, and obviously, it's more story driven. But if the story fits and, like, the you could see a path, then obviously, of course, this could be an investment. So I appreciate you having me on, and
All right.
yeah, I appreciate it, and hope you have a great rest of your day. Okay.